This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Rising demand for oil abruptly reversed course in July and is set to proceed more slowly for the rest of the year due to the spread of the COVID-19 Delta variant, the International Energy Agency said on Thursday. Growth for the second half of 2021 has been downgraded more sharply, as new COVID-19 restrictions imposed in several major oil-consuming countries, particularly in Asia, look set to reduce mobility and oil use, the Paris-based IEA said. We now estimate that demand fell in July as the rapid spread of the COVID-19 Delta variant undermined deliveries in China, Indonesia and other parts of Asia, it said in its monthly oil report.
Oil prices declined on Thursday after the International Energy Agency, IEA, said the spread of the Delta variant of the coronavirus would slow the recovery of global oil demand. Brent crude futures were down 15 cents, or 0.21%, at $71.29 a barrel by 13:56 GMT, after earlier rising to a session high of $71.90. U.S. West Texas Intermediate crude futures were down 22 cents, or 0.32%, to $69.03. The International Energy Watchdog said in its monthly report that rising demand for oil reversed course in July and was set to proceed more slowly for the rest of the year after the latest wave of COVID-19 infections prompted countries to bring in restrictions.
Moving on to the top news in the energy sector.
Oman has established a national hydrogen alliance to develop an industry for the production, transport and use of the fuel that Gulf states have been increasingly looking to as a business to meet the worldwide demand for clean fuels. Oman's alliance consists of 13 institutions from the public and private sectors, including government agencies, oil and gas operators, educational and research institutions and ports, state news agency ONA said on Thursday. The project is part of Oman's energy diversification aims within its Oman Vision 2040 economic transformation plan.
OPEC on Thursday stuck to its prediction of a strong recovery in world oil demand in 2021 and further growth next year, despite concerns about the spread of the Delta coronavirus variant that has weighed on prices. The OPEC in a monthly report also raised its forecast of supply from rivals, including U.S. shale producers, next year, a potential headwind for the efforts of the group and allies to balance the market. The global economy continues to recover, OPEC said in the report. However, numerous challenges remain that could easily dampen this momentum. In particular, COVID-19 related developments will need close monitoring.
Next, we have the top news in metal markets.
Japanese steelmakers are on track for a V-shaped annual profit recovery from the pandemic-induced slump, as solid global demand boosts prices while higher prices of iron ore and coking coal drive hefty inventory appraisal gains. Japan's second biggest steelmaker, JFE Holdings, on Thursday nearly doubled its annual net profit forecast following similar upgrades by Nippon Steel and Kobe Steel last week. JFE now expects a net profit of 240 billion yen, $2.2 billion, its highest since 2007-08, against its May estimate of 130 billion yen and a loss of 21.9 billion yen last year.
Nickel rose to its highest in 2 weeks on Thursday on renewed risk sentiment after U.S. inflation figures cooled talks of Fed tapering, while strong consumption and falling stocks underpinned the metal's appeal. Benchmark nickel prices on the London Metal Exchange, LME, added 0.9% to $19,551 per ton in official trading, headed for its third straight session of gains. Meanwhile, the most traded September nickel contract on the Shanghai Futures Exchange closed 4.6% higher at 146,720 yuan, $22,667.16 a ton. We will now look at the top news in the agricultural sector. China has lowered its estimates of soybean imports in the year 2020-21 following a decline in crush margins, the Ministry of Agriculture and Rural Affairs said in its monthly crop report on Thursday. China's 2020-21 soybean imports were seen at 98.6 million tons, down 1.84 million tons from last month's estimates, as the crushing volume of soybeans has fallen since July because of declining margins, the report said. Importers also delayed purchases of the oilseed as the market expected prices of the new crop to fall in response to a bumper U.S. harvest, the ministry said.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.